Disney stock is at its lowest price since 2014. We're going to explore the headwinds that Disney is facing and why I think it is a high-risk company that is going to continue to face significant challenges going forward. Disney is a bloated conglomerate that has grown too large and unwieldy to manage effectively. Disney can be understood as two businesses. One, Disney Media and Entertainment Division, abbreviated as DMED, and two, Disney Parks, Experiences and Products, abbreviated as DPEP. Disney has significant problems across all its businesses. Linear TV is in decline, streaming is a complicated industry and not as profitable as everyone once thought a few years ago. The film and studio unit is underperforming, and while the parks have had some degree of success, they are not as successful as you would think they would be, given that we're past COVID at this point. While most of Disney's revenues come from media and entertainment, most of the profits come from parks, cruises, and products. If they can address profitability in media, that may be enough to change the direction of the company as a whole. However, I'm not sure there is a scenario where traditional TV becomes significantly more profitable. Disney is losing money because it is overpaying and under-delivering movies and films, while many movie theaters are at the same time going out of business. Disney hasn't paid a dividend since 2019. The price-to-earnings ratio is still very high. It's about 70, so compare this to Netflix, which has a PE ratio about 44. Movies. The budgets for films are too high and the quality is mixed. Everyone from Netflix, DreamWorks, and Sony are running circles around Disney in terms of animation quality. For example, Puss in Boots did much better than Lightyear. The success of the Mario movie shows that there is still a market for animation in movie theaters. ESPN. ESPN overpaid for sports. ESPN must still pay the NFL, NBA, and other sports leagues despite cable cutting because of their current contractual agreements. ESPN and the model as a whole cannot support the league's lofty ambitions and demands any longer. The deals ESPN made were atrocious, and it will take time for them to expire and be renegotiated. Carriage fees are another significant issue that deserve an entire video in their own right, especially how they pertain to Disney streaming. Disney spent too much money on content, including Fox assets. There are rumors that Disney will cut its investment into Disney+. Disney may find some success in licensing its content to other streaming services, but it's not clear if this is something that they're considering or will do. Theme parks. Going to a Disney park is a once-in-a-lifetime experience. Once you've done it and are out of a lot of money and maybe didn't have the best experience, you're not likely to go back. There is only so much profit that the theme park segment can generate. While I think we all agree that there is still a lot of attendance at the parks, I would argue that the quality has declined. Talking to a coworker that took his family to the Orlando park, I could not believe how much money he spent at Disney. Disney is competing against places like Universal Orlando, which has been adding new attractions, has cheaper ticket prices, the lines are smaller, and it's cheaper. So there's significant challenges in the park business. Television. There was a time when television and parks were the main profit drivers. Now television is losing money each quarter, and so is the movie business. Disney Plus is also not earning large margins. I do not really see any prospect for growth here. In addition, the overall business model is just risky. Just a few bad films can sink the profitability of the media division. In conclusion, there are numerous issues with Disney as a company, including earnings and financial performance, market trends and competition, especially regarding animation from other studios. Its debt load, but you could make an argument that the company will not have difficulty servicing the debt, but the debt is still significant nonetheless. Management issues, especially with turnover with executives. Valuation and dividend concerns. We talked about how they cut the dividend. And quality issues, especially with its films. I think Disney could continue to go lower, and I just do not see any films that I'm excited for. I don't think you can really make a coherent argument that there's going to be a turnaround anytime soon.